So this is a little known secret that the banks know and lenders know, but for some reason they don't like to tell the public. But a little thing about me is I like to keep our clients as informed and educated as possible because at the end of the day, we want to help you find the smartest and best loan strategy so that you can dream bigger. So let me show you this. If you go to Google, in fact, you can go to Google right now, type in Fannie Mae LLPA, stands for Loan Level Pricing Adjustment. And if you click search, you're going to see right here at the top this loan level price adjustment matrix. And when you click on it, it's going to bring up a PDF of what's going to look a little bit Greek, and there's 9 pages, but really I'm going to draw your attention to page number 2. This is what all the banks, when you're looking at Fannie and Freddie or conventional mortgages, this is what all the banks have to abide by when it comes to your interest rate. And what you can see here in this first chart is you've got a credit score tier, and then you've got the percent that you're financing here listed in the columns, which is a little bit different because when we think of down payment, we're thinking 20% down, but that means you're financing 80% of the home. So if you put 5% down, you would be financing 95% of the home. What the lender cares about is how much we're lending versus the current market value. So you can see that the number one top tier is anything 780 FICO score or above. If you have a FICO between 760 and 779 as an example, you would be in the second tier. Come down here to a FICO of 700 to 719 and you're in tier 5. That matters when it comes to your interest rate. And if your neighbor had a 780 FICO score and yours is a little bit different, your rate options are going to be different because of these LLPAs that are set directly from Fannie or Freddie before the banks even get a hold of it. And then let's say you're in this 740 tier and you're putting 5% down, you're going to have a 0.5 rate adjustment to the going par interest rate. Now, if you were putting 40% down, there wouldn't be any kind of adjustment. So you can see the amount that you put down or you finance and FICO score plays a large part, but that's not the only part. There's about 28 other components that are involved. Things like, are you looking at a condo, an investment property, or a second home? Do you have a second lien or subordinate financing? And then just know that every single day, interest rates change. And not only do they change every day, but you can see here this candlestick is a lot longer than what it is here. That means the movement within that one particular day was a lot greater than maybe this other day here. So not only do rates change every single day, but they change often throughout the day. So if you're trying to compare mortgage rates to another lender that looked at rates at a different time period or to maybe a neighbor, it really matters on your total scorecard plus what day and time that they looked at rates for you. So I know shopping for rates can be confusing, but that's why you have us. We're here to help shop not only all the rates, but then present them to you because our belief is that you get to pick the rate, not us.